banks locally, and so we had sent an RFP to Fulton Bank, Jonestown Bank, Fredericksburg Bank, and Metro Bank. We did not get a response from Metro. Fredericksburg had declined, so they don't have an appetite for bank qualified paper right now. You probably saw the announcement yesterday. They've agreed to merge with another bank, so that might have influenced their decision. I don't know. And we did receive two proposals, one from Fulton and one from Jonestown Bank. And what we had asked for, as you know, the loan goes out 7 years to 2022. And so we asked for a full-term fixed-rate loan, of which Fulton Bank offered a rate of 2.4%. That results in present value savings of about $201,000, or about 2.27% of the bonds to be refunded. We would like to see the savings at least 2% of the bonds to be refunded as kind of a threshold of where we think it's a reasonable decision to move forward. Jonestown Bank had offered a lower rate of 2.24, but only for 5 years. And so we would have had interest rate risk in the last 2 years. They did offer a cap of 3.75, so we ran the numbers as if the cap would go into place. And the savings dropped out to be $176,000, right at 2% and just a little below the Fulton Bank loan proposal. At the same time, we did ask RBC to update where they think they could sell bonds in the marketplace, and they came back at an all-in rate of about 2.4. The savings were only $137,000. And the reason the savings are lower for a bond issue versus the bank loan, in spite of the interest rate, is that we have to pay the underwriter, the rating agency, and the bond insurer. So there's a lot more cost of issuance, particularly on a short loan, that affect the net savings. And so the resulting savings are about 60% of what's being proposed by Fulton Bank because of the higher fees. And so our recommendation is to move forward with the Fulton Bank loan. I talked to Peter Edelman. We can close on July 23rd. There's a little bit of paperwork to clean up with DCD. But we could close in the month of July, and then we would have completed both refinancings this year at very significant savings. We do not need a rating, and we do not need bond insurance for a bank loan, so we save a lot of those expenses and time in the process. $9,041,000.
Also move.
Second.
A motion and a second to approve the moving bond, a 2009 bond, to financing with the Fulton Bank. All those in favor indicate by saying aye.
Aye.
Opposed? I forgot to vote. Aye.
Okay, thank you. So I'll let Fulton Bank know, and also Jonestown Bank. We appreciate their time and effort. And just as an aside, with the recent passage of the 911 legislation with more funding and a year passing of a balanced budget, and assuming your 2016 budget is balanced, we think that early next year might be a good time to go back to the rating agency to see if we can get the rating up to A again. I think there's a lot of things going in the right direction for the county that might get us back to that A category. And I think the 911 funding will help a lot.
Yeah, that's really been, we've been underfunded there for a long time.
Long time, yeah. It's almost $1 million of incremental funding, right, Jamie?
Yeah.
Yeah, so I think that's going to make a difference.
Agree.
Well, Jay, we certainly appreciate your efforts, and I think you're helping us to move forward in the right direction, and we look forward to continuing working with you.
Thank you, appreciate it.
Thank you.